Yo, good morning, traders. Guys, welcome back to Market in the Morning. It is August 10th. Guys, I hope you had a fantastic weekend. Hope you're excited to make some money today. We're going to dive right into markets, S&P 500, NASDAQ, gold. We're going to take a look to see how the dollar's trading, what's been happening with the yen. We're going to cover any breaking headlines that came out over the weekend. What is the current status of the Strait of Hormuz? Are we seeing things calm down and oil prices come lower? We have CPI this week as well, and we will be joined by the one and only Nalab very shortly. So smash the like button. Market in the Morning starts right now. Yo, good morning, guys. Luke, Piyush, what's up? What's up? Famous, good morning. Guys, happy Monday. Hope you're all doing well. Hope you're excited to make some money today. Gold is really rallying. In my opinion, I think with the dollar holding where it's at, gold is ready to continue this trend. Very quickly, quick look at the chart over here of GC with our market news on the left side. I'd want to see this 4380 area start to hold up on gold. Good morning, Mick Elite. What's going on? MC Elite. What's up? What's up? Welcome. Asand Thomas. Hello, guys. Good morning. Hello and welcome to Market in the Morning. Hope you guys are all doing great. Let me just move something around over here. Just going to throw that logo onto the left-hand side, and we are rocking and rolling. Is Nas short in a nice Nas short right now? Very nice, very nice. Be careful with those NASDAQ shorts. I'm going to tell you why in just a moment. Let's pull up NASDAQ since you did mention it and you're in the position. So, yeah, I'm with you on those Nas shorts. I'm not in the shorts myself. I would like to see a pullback towards that 746. What I would want to know more importantly, though, is I'd want to ask market what the bias is on NASDAQ right now and if there were any shifts over the weekend. So we could use the microphone tool here. What's the bias of the NASDAQ right now? And were there any shifts over the weekend? And just like that, we're going to be able to ask market. It's going to pull any relevant headlines. It's going to give us the bias. Let's see if that AI optimism is still holding up. Let's see if those rate hike expectations lessening, right? Is that holding up with the optimism as well? Wednesday CPI news, you got it, right? So something else, knowing that it's CPI this Wednesday, we might want to be extra patient and even lighter size on our trades. Expect more range versus volatility because we might be waiting for those market makers to be seeing how CPI comes out, unless it's very obvious and it seems to be priced in. But we're going to cover the oil charts in just a moment, and I'll give you my read on where CPI and where inflation might be headed going into CPI this week on Wednesday. So guys, run that like button up. Let's show some love. Let's have some fun today. What's up, Jay? Rotten is a gunner says, Kev 4380 is my plan for long today. Nice to see you as well. Always great to see you, bro. Always great to see you. NASDAQ 100 gains as AI optimism outweighs oil and Bank of Japan hawkishness. So there we go. What I say before, guys, keep an eye out for that AI optimism keeping us bullish. That's exactly what we're seeing right now. NASDAQ continuing higher. Bullish targets looks like we have is 20,157. That is about 300 points from where we are right now. So it gives us some good room right there. Why is the day sentiment leaning bullish? Reversal risk because AI earnings and CapEx sustain growth investor interest. Told you guys as well. I'm going to mention it here too. Investors, big institutions, those big $1 million, billion-dollar investment firms, they are going to want to milk a bull rally as long as they possibly can. So as long as we're getting consistent revenue for these big tech companies because of AI, as long as, yes, they're spending more on CapEx, but are they able to turn that into profit? And it was Microsoft and it was Amazon that proved they're spending more on CapEx it was even as much as 20% at some points, spending 20% more, spending billions and billions more. Usually for an investor, that would get concerning because you're looking at a margin crush at that point, right? So, for example, Tesla had a margin of 4.1% the last quarter, This recent quarter reported their margins fell to 1.4%, nearly a third. Because of that, that was all because of CapEx. They started spending way more on CapEx. They had a negative net cash flow for the first quarter in 2 years. There was a lot really moving markets right there. So guess what? Markets gave us the reaction, but at this point, we had news again. They had big earnings, and what happened? Markets are giving us that optimism. They're saying, great, you have all this spending. Now let's turn that into some profit. Awesome, guys. Let's go. Seb is not joining us today. Seb is going to be joining us tomorrow, 9:05, around 9 o'clock. Guys, tomorrow, Tuesday's episode, just want to give you a quick heads up. I'm going to be covering Chart Fanatics from 8 to 9, and then we're going to be covering the other channel coming right here on Market in the Morning as well. So that's going to be a lot of fun. Sorry, saw a notification popped up. But Seb will be with us tomorrow at 9 o'clock when we start. I'm going to swing by. Nice, on Friday. Sweet. Did you see Top Step Stop CPI trading? I did see that. You know, it's funny, people get upset about prop firms, get upset about their rules and stuff, but people never take the time, in my opinion, to really step back and thank prop firms for being there and for being that opportunity. When I got started with trading, there was no prop firm this, prop firm that. No, you either had money to trade or you paper traded. There was no spend $80 on an evaluation account, and if you pass it, you can get funded and make money and take payouts. That's crazy to think your ROI on that is being $80 and payout of $2,000. That's a beautiful thing. That's what investors, traders, everybody wants to look for. So sure, Top Step banned CPI. I believe they banned executing new trades between 8:25 and 8:35. I don't know. I'd have to look into it myself to see, like, if you're in a trade from 7:30, can you hold it through CPI? So we'll take a look on that. Perfect for helping build my account. There you go. Good. Good. Guys, good morning. Good morning. Love seeing you guys here this early, bright and early. It is Monday. We're looking at NASDAQ right now. It does still have more of a bullish bias. If we do take a look at some of our equities, we are still moving higher. So let's see. Take a look. We have NASDAQ, daily time frame. Just start with the daily, guys, right? People are so quick to look at a 15-minute and be like, oh, well, we're at resistance right now. We're selling off. I got to go short. We're dropping like we're hot. I can't miss this move. Markets are moving without me. First off, if you say markets are moving without me or even think markets are moving without me, I want you to take that idea, crunch it up, and throw it in the trash. Replace it with markets are always moving, right? Markets aren't moving without you. Markets are always moving. If you took your setup, you're in a trade, markets are moving with you. There is no markets are moving without you because markets are always moving. They don't even know you're there. Remember, markets don't even know who you are or know that you're there. So start on the daily time frame. What do we see since past this last Thursday? The last Thursday over here on NASDAQ from the measurement tool, we are up over 9%. You're going to tell me in 7 trading days, in 6 trading days, that we're up over 9, almost 10% on the NASDAQ, and you want to be long-term bearish at the moment? Now, no, not long-term. We're selling off. I got to short these highs and hold a swing trade short. But just a long-term of a day trade perspective, right? Is this really a market that we'd want to say 9% to the upside? All of this volume that started to pick up in here too. 10,000 points to the upside, 27,000 to 29,200, 29,800. Wow, look at almost 30,000. So again, looking at this, we are still bullish. 2,600 points. What I say, 1,000? No, 10,000 pips, 2,600 points. Extremely bullish. We do want to look for those longs. Again, if you're in those shorts right now, yes, right now, sellers have control. It is still pre-market. It is 8:30. I really want to see 29,743 on NASDAQ, somewhere in this range, start to hold for the long positions. Look for some longs. Use that fundamental bias holding us bullish. Look for previous day high as a first take profit, new high of day as the next take profit. And just look to ride that optimism. Look to ride that momentum we have when buyers step in. Yes, we had a pullback, but we had this pullback above these recent highs. US 30, I got you, brother, absolutely. So NASDAQ, we're looking to see if those buyers can hold. At the moment, we are selling off, so we don't want to catch a falling knife, right? We always talk about knowing when to trade, knowing when not to trade. Well, guess what? My edge gives me this zone right here. Gives me this area up here. In the middle, you know what this is? This is a no trade zone. So markets can do whatever they want. I'm not taking a short position right now with a random stop loss just to possibly get wicked out. And then guess what? You take those trades that go against your rules, you're going to do something else that goes against your rules. You're going to take another, oh, boom, it stopped me out of the shorts. That means we're going back to supply. We're bullish again. Stopped me out. Now I got to go long. Then it continues lower. No, give yourself the predetermined and preset zones. So for myself, the long position, 29,748. If we don't make our way back to this demand zone, which it looks like we definitely have a good chance, we're about 60 to 70 points away right now, then guess what? Next trade setup is a break higher, retesting continuation, right? Regardless, I'm not looking to catch a falling knife. I'm not looking to trade in the middle of nowhere. I'm not looking for random trades. I'm looking for either scenario A or I'm looking for scenario B. That's how your trading should be every morning, no matter what you trade, what time you trade. It doesn't have to be a pre-market routine like, oh, well, I don't trade New York session 9:30, so when's my pre-market routine? Your pre-market routine is just 10 to 15 minutes looking at the charts before you're ready to actually execute a trade. So you can look at the charts with a non-biased perspective before jumping in randomly. Let's take a look now. So that was NASDAQ. Great rundown on NQ. I know somebody asked about US 30. I'm going to run us through gold really quick. I feel like gold's got a bit more momentum and there are a lot of gold traders, whether you're trading XAU USD or GC. Right now, I'll cover XAU USD for you guys regardless. It is more of a bullish bias. As you guys see, we have been disrespecting. I have areas of resistance, areas of support. I determine bias depending on how markets are reacting to them and how we're reacting to previous day high and previous day low. Well, guess what? We were respecting supply. We were respecting all this resistance when we were bearish on gold, but then we started creating support and we flipped bullish, crushing right through all of those areas. So we could start deleting those, right? Never get married to a zone. Delete them, move on. This is a great key level right here, another support area. So I'd want to see gold start to hold. If the dollar is still selling off, quick look at the dollar right here. So dollar is currently pulling back, but it's pulling back into this liquidity area, right? Where this huge impulse move occurred. Every time we pulled back into it, guess what happens? We react. We chop our way into it, start to react, push into it again. Now, do we start to react lower on the dollar to support a more bullish gold? That's what I would like to know right now. Definitely want to keep an eye on the dollar when it comes to trading gold too. And what you do want to do as well, guys, is I'll mention you want to look at the daily time frame when you're looking at the dollar's bias, because we don't want to be so zoomed in and be like, oh, well, look, the dollar's pulling back. It's bullish right now, right? If you think the dollar's bullish and you weren't looking at the daily time frame, guess what? Daily time frame is telling you a whole nother story. Daily time frame here on the dollar says it's down almost 2%. That's momentum to the downside. We're back below this key area I had on the daily time frame too. So all of these reasons supporting a weaker dollar on the higher time frame is now helping me support a stronger gold, whether it's GC, XAU, USD. So again, that gives me a more bullish bias. I want to see this area that held overnight hold again, right? So we want to see, can we possibly sweep this low around 43.73 and then look for those long positions? So we sweep that low, reverse back higher, stop becomes wherever our new low was formed, target right here, target previous day high, wherever. We do have an area that price rejected over here, so that could be our first take profit level. I'm going to mark that out as supply. And again, what am I doing right now? I'm going over my fundamentals to check to make sure things are still in line. I'm lining up the dollar with gold. I'm finding higher time frame bias, higher time frame price levels to watch. We're putting the pieces together. Trading isn't just, here's my fundamentals, I'm going to grab a random long. Trading isn't just, here's a resistance point, I'm just going to sell it. No, it's putting the pieces together. Proper risk management, exposure to the market, knowing the bias of the market. If I know that we have a stronger bullish bias on gold, then instead of going short at supply, I'm more interested in seeing one of two things. I'd rather take a long at demand, that's number one. And number two is I'd rather see a break above that area of resistance and then a return back to hold it as support. Resistance becomes support. This becomes that, right? So very cool there. Great breakdown. This is, again, how I break markets down every morning myself. You guys join me here every day for Market in the Morning. Make sure you hit that like button if you haven't already. It is Monday. Nalab's going to be joining us in like 10 minutes or so. So very cool. Very cool. Let's do US 30. We got somebody asking about the Dow over here. So let's pull up YM and let's do our market bias for YM. So Fed hike odds trimmed after weak July payroll miss. Trump mining and battery investment plans boost traditional industrial spending. That's a good sign for the Dow, but what's something we noticed the first time we opened the chart right here today on the 15? We see that we have had a bit more weakness than we had strength on the NASDAQ and ES. What do? We come to a daily time frame. Okay, well, yeah, it looks like some weakness, but in all reality, bit of a similar situation. We were just at all-time highs on the Dow just 3 to 4 trading days ago. So guess what? Do I really want to be that trader that goes, oh, we can't move any higher, I have to go short? Or do I want to be the trader that says, I see what the market is doing, and I'm going to follow this trend until it does start breaking? And guess what? That's going to keep you on the right side a lot longer than you're trying to flip it and jump on the wrong side, thinking that you're calling the highs without any other real reason to take the trade. Now, don't get me wrong, right? That doesn't mean, oh, so you have to go long today. Longs are the only trades that'll work out today. Guess what? We can move lower. We can start to sell off. That's why when we come up with these trade plans, we want to come up with both sides. We want to know what the overall trend is, but we also want to know what can happen if this price level breaks, if that price level breaks. We want to be aware of everything. Let's update previous day low, previous day high. You can do this analysis on anything, guys. Equities, futures, Forex, just a top-down approach keeping you in check. So this is our previous day high and low on the Dow. So again, the way I like to use these levels, sort of like dictation levels that tell me, okay, if we're above previous day high and we don't just sweep it in reverse, we actually break it with some strength, then I'm only looking for longs, right? We're looking to trade that overall trend. If I see that we're heading towards previous day low, let's say I don't find any support down here, I'd look for a sweep of that and then a reaction back above. Then I'd look for some type of entry point, whether it's if you trade inverse fair value gap, a fair value gap, a low volume shelf, an opening range breakout possibly. It's still only 840. But regardless, looking for that reversal entry off of previous day low to then target previous day high. A lot of traders would think, oh, wow, that's such a big trade. Not necessarily, because all we're doing is trading the recent range that we've seen has already been established in these markets. When we find those ranges that have already been established, those have a lot more strength than looking for a breakout trade and continuation, because those breakout trades a lot of times end up getting faded. So that's my quick breakdown on the Dow. I could cover some, let me cover some lower time frames real quick for you too, just to find some levels, areas of interest, all that fun stuff. Guys, let me know if you want to see any, let me know any other tickers. Hit my TP on Nas Short. Luke, let's go, bro. Let's go. Luke is killing it, man. Absolutely killing it lately. I think, what'd you say, last week was your first payout? That's amazing, guys. Accomplishments. Give yourself achievable accomplishments every day and every week. The bias on NQ, bullish reversal risk. Pull up NASDAQ one more time. Probably still selling off a bit here in the pre-market. Yup. So listen, because I'm looking for possible longs off the support, I'm happy with it selling off in pre-market. Get me closer to this area, and then guess what? Let's say market's open somewhere over here. Where'd that go? Right over here, around 29,785, and all we need is a quick 40-point dip, find some support, we start reacting, I execute long, stops below, and we look to see the reaction there. Again, to the top of the range. Not looking for a crazy move, but looking for a decent entry, decent stop loss, and good risk to reward on that trade. Looking for a good reaction, my preset levels. First payout 2 weeks ago, up to my fifth payout now. Bro, that is mind blowing. That is amazing. You gotta tell us where things started to shift for you. What clicked that brought you from boom, I got my first one to my first five? Because that shows consistency. That shows that your edge is shining in these markets. Awesome, man. That is amazing. Guys, give it up for Luke. W's in the chat for Luke. That is fantastic. See if we could throw a noise up in here. I wish I had what's it called? Oh, like a blowhorn. The brr, 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 brr. See if you guys could hear it. Let's see. Nah. Yeah, absolutely. Just top-down analysis and waiting for those key levels that we talk about. That's amazing, Luke. Good for you. Good for you. That's it. Patience and discipline. Patience and discipline. Guys, listen, you keep up the discipline, you keep showing up to market in the morning, you show up to trading every day, and you find that routine, you find that discipline, you're going to be taking payouts consistently too. You have to be consistent with everything that you can control in the market. What you can control is how you read charts, how you give yourself that time in the morning, the education that you give yourself, depending on who you're learning from or how you're learning. All of it comes together. All right, so that's NASDAQ, ES, gold. Let's take a look. Let's see. Is there anything new in the headlines over the weekend that I should be aware of? Been trying out Mel's system also. Oh, I bet. So let's see if there's any new headlines that we should be aware of from the weekend as we're trading the NASDAQ and gold. See if there's anything huge. The big story over the weekend is Hormuz. Here we go. Iran and Oman agreed on a maritime service feed deal and navigation plan, but reopening remains conditional on U.S. ending its naval blockade and paying compensation. Certainly sounds like a win to me. Keeping oil supply risk elevated. Meanwhile, Trump expected Hormuz to reopen and private nuclear deal signals due to says the Wall Street Journal, and some normalization is underway. Okay, so some normalization, that is a good sign. Iran president says supreme leader meeting lasted 7 to 8 hours. That was 30 minutes ago. U.S. assesses, yo, this is sick. Ask Market is game changer, man. The fact that, so yes, we already had our news feed. We were able to break it down to breaking news. But the fact that we could ask it, is there any news, is there anything new in the headlines over the weekend that I should be aware of? And it's able to pull up. First one was major. This was 30 minutes ago. Second one, U.S. assesses Bank of Japan signals on possible September rate hike. Yen policy expectations in focus. U.S. monitors governor remarks after Bank of Japan signals. Okay, exclusive Ukraine. But really this main one, the fact also that it was able to find that top one. I know it looks like it's in time order right now from our most recent, but still very valid. Hassett says he would hold or cut rates if at Fed now. Hey Hassett, you're not in the Fed right now, so nobody asked you, so that's cool, bro, but thank you. Obviously you're saying that, you're Trump's right hand in a bit of a situation, so if Trump wants cuts, you're going to say you want cuts too. This is a headline that does not hold much weight. People ask, how do I know what headline holds weight? How do I know what doesn't? If somebody that isn't a Fed chairman, isn't the FOMC, isn't in the FOMC, isn't the head of the Fed, guess what? His opinion means crap. His opinion doesn't mean anything to us. They're actually watching they are watching market. They're always watching market in the morning, man. Other key shifts, Bank of Japan, hawkish signals point to a September rate hike pressuring yen cross and global risk assets. Hassett dovish Fed comment would hold or cut rates now, eased hike fears. Like again, it could ease hike fears, but it's not going to be the make or break. It's not going to be the reason we have a 40% chance of a rate hike, then we have a 30% chance. It's not going to make that 10% difference just because Hassett says something. Gaza disarmament talks advanced, reducing geopolitical risk premium, Ukraine and China. So nothing massive in this other key shifts area, other than, of course, the Bank of Japan. This was a great update on what's going on with Hormuz. And now guess what we can do? We could take a look at oil and see how oil's trading. Is oil moving higher or lower? What is the impact on oil right now? There we go. Oil. It is moving higher at the moment. We could click our most recent candle to see what's moving price higher on oil. Guys, if you haven't already, man, hit that like button. We're running through these markets today. It's only been about 26 minutes. We've already covered everything. That's how easy MRKT makes it for us. No clear crude specific catalyst. Price drifted with a narrow range. It's probably because I clicked a small green candle. Move was tiny. Yeah, I wonder if, let's go to like a 4-hour and then click this one right here. Oil rallied on headline that Iran and Oman are advancing a Hormuz navigation deal. Move came during the overnight liquidity amplifying headline sensitivity. Price surged off the open, then held most gains into the hour close. Broader tone remained risk on for equities and steady for oil on easing shipping fears. No economic release. And this was the headline. Iran says Strait of Hormuz reopening depends on U.S. ending naval blockade. Nations agree on navigation plan with technical details pending. Let's hit explain on that. Have it break it down for us a little bit. So risk off. The headline keeps a geopolitical premium in energy and shipping because Iran is tying any reopening to U.S. concessions. So the market cannot price a clean restoration of flows through Hormuz. This supports crude and safe haven forex while pressuring equities. So do want to be a little careful on that. Let's see. Great question. What kind of trader are you? One that adds to winners, lets winners run, or one that cuts their trades early just for fun? I don't know if you meant to rhyme there, but I do like the rhymes. So myself, I'm a fan of sort of letting the trade play out, so I'll take entry. There's two ways I'll take entry on a trade. I'll either enter my full size, which is a risk of $150 to $200 per trade, and, if anything, sometimes I'll take a half size, I'll take a starter position, $80 on that risk, taking some micros, and I add to the winners. Never want to add to losers. The reason I might add to a trade or start a trade like that is because it's the first reaction. So like this is a great example today on NASDAQ. This 1 hour area that price held and went bullish from yesterday, 240 points to the upside. I'm going to look for support here. I might start a position on the first reaction so that if it does stop me out, I'm able to take a paper cut. We're able to move on from there. If it doesn't stop me out and it continues and it gives me a new confirmation for entry, I'm able to add to the trade, maybe even put on a little more risk since it's more in my favor, tighten up my stop loss to the recent low, and let that winner play out, right? In terms of taking profit, usually would like to at least lock in a 3-1 if I'm looking for a 4-1 and higher. 2-1 is still solid too. 2.5-1 is great, but ideally I do myself want to be looking for some type of maybe 3-1, 4-1. Those are the more ideal setups. It gives you more of an opportunity to take that loss, take another, and then make it all back, right? That good risk reward, good risk management right there. Yeah, exactly. Love that. Yeah, 100%. Guys, Nalab's going to be joining us in just a minute here, guys. So make sure you run that like button up to welcome him. Yes, you got to take trades as paper cuts. If you're taking a trade that's a loss and you're like, oh my God, I can't believe I just did that. What would make me do that? I can't believe it. Then guess what? You're oversizing in that trade. You're risking too much. If you're taking a trade and you're like, all right, next, that's proper, right? That's good. That's good risk management. Keeps you at peace of mind. We always talk about psychology being massive when it comes to trading. That is what we need. Awesome, guys. Awesome. Look at this. NASDAQ continuing lower. We have 40 minutes before the New York session actually opens, so we do still have some time. I'm looking for NASDAQ longs near 29,744. ES possible longs near 77.68 If anything, we do have some internal liquidity from the overnight session. So here's our pre-market low right here. It's actually right over here. Yeah, absolutely. Absolutely. You know what it is too? It's not just that about risk. It's that risk really determines the trader and how much discipline you have. If you think you have discipline, you think you have a good trade plan, but you risk a little too much on one trade, because we're all human, we all have psychology, we all have different brains that work differently. Well, guess what? Taking a loss, regardless of how different we all are, 9 times out of 10, taking a loss is going to shake you. Whether not physically shake you, but mentally shake you and even open up some weakness. So that's why in my opinion, risk is the first thing you have to learn when you trade. You have to be able to take losses. When you're able to take losses, the winners will come. If you can't take a loss, it doesn't matter how much you make in trading, you're probably going to lose it all at some point. So your risk management is extremely, extremely important. Awesome, guys. Sweet. Love it. Love it. Keep the questions coming. Let me know if you have any thoughts. I like to let my trade run and trail my stop loss. There you go, Luke. That's awesome. That's awesome. At what point do you trail your stop loss? I'm going to see it either stop loss or take profit. That's it. It's the only way the trade gets closed for some people. Stop loss or take profit. That's one of the not easiest, but more disciplined routes that you can go. For sure. For sure. 100%. Guys, we are going to bring Mr. Nalab on. Nil, throw me a thumbs up when you're ready and I'll bring you on, homie. Yes, sir. Yes, sir. Let's go,
What's
bro.
up, man? How's it going?
Going good, man. How are you?
I'm doing good. Doing good. Got a banger of a week to get
Yep.
into, and I'm so excited, man. I'm CPI week is honestly my favorite week of all. Every single time we have a CPI, there's 12 weeks in this year where I'm very, very happy throughout all of it, and that is CPI week. So this is going to be an amazing week because we also have clear sentiment across the board. And it doesn't matter what you trade, the sentiment in the financial markets right now is very optimistic. That's why you see US equities continuing to be bullish. That's why you see ES, you see NQ. These are all bullish currently. Yes, there's a reversal risk because we're at highs, right? It's normal to see a little pullback down to support before buyers come in. Now, guys, before we even jump into this, we want to keep in mind that just because we have a major event this week doesn't mean that we need to be trading on the event, the release of it. We can position ourselves before or after. The point being, we need clean conditions, clean sentiment in order to have a higher probability of success in the markets. I know myself, and I perform horribly in ranging markets and in markets where there's a lot of counter trend moves. So I don't perform well when I'm counter trend trading. That's why when markets are moving in one-sided sentiment, it's much easier for me as a trader knowing my edge to benefit and take advantage from it. And that's what matters, is that you know what your edge is. My edge, like for example, clean trend. I took this pullback buy yesterday during Asian. Now, I'm still in this position. All my positions here are at break even, and I'm in from 43.17 to 21 between there, that range of 40 pips. I'm in since there, since Asian session, and now we're right back above it. Okay, so now what is my plan going into this session? I know that if I look at gold here, gold is bullish continuation, right? But gold can pull back to 4,300, 42.45. These are still valid buy zones. Now, why is it a valid buy zone? Because the sentiment is bullish, and because it's bullish, any pullback that we get, any deeper pullback, is a better probability for buyers to rally. Why? Because a cheaper price is better than where we currently are at, right? So even if price was to pull back, let's say, and hypotheticals down to here, buyers could step in, right? Because we previously had buyers step in here, right, for NFP. And then also, any price lower than this is still a better buy price when you're thinking about it in terms of the trend and in terms of discount as well. So these are things that you need to keep in mind, that when you're following sentiment, it doesn't matter how deep this retracement goes. It doesn't automatically make gold bearish. It keeps gold bullish, because that's how markets work. And you just be retesting some major zone or something from the left that lines up with market structure. Now, I think gold can also just continue straight up from here. Like that this was just a retest of this area where buyers previously came in overnight, and now gold could merely just head up back towards up to 43.80s. One place where I would want to keep my eyes on is this pre FOMC, the FOMC highs that we had from the June FOMC, right? The interest rate decision right here where Fed held rates, but their summary of economic projections came out very hawkish. And if you want to back test that, you can easily go to market, and let's go right to that candle right over here. So you can click explain move here, and it'll bring up that hawkish Fed dots and higher for longer path spark off a gold sell-off, right? And this was right at 2 p.m. Eastern. A hawkish FOMC projections and higher rates boosted yields and the dollar, triggering a high volume liquidation in gold. And gold dumped nearly 100 points in the first minute as macro funds reprice terminal and path of rates. Now, this is what I want to bring the focus on, is that none of these reports alone impact the financial markets, okay? And I recently made a video for this specific topic on YouTube. Kevin, if you don't mind dropping this link, maybe people can check it out. I'll send in the private chat right here. Have a look after the live, of course, because pay attention right now to what we're talking about. Is none of these reports matter on their own. We have CPI this week, and we know it is a very high impacting report. It's in 2 days, and we'll break down how we can position ourselves for it, okay? But we need to keep in mind that all of these reports, what they do tell us is that it is a story about the interest rates, okay? So jobs, inflation, growth, and even geopolitics, none of them, and I mean none of them matter on their own. They all matter because the markets start pricing in what's going to happen to interest rate expectations. And interest rate expectations reflect what happens to your chart. And that's where that repricing happens, okay? So this NFP, CPI, PCE, growth, PMI data, GDP, none of these make a difference on their own. It's how they come together to paint a story about interest rate expectations. That's what gets reflected onto your chart. Now, this is very important because your mentor is likely not teaching you this, right? And you need to be able to differentiate how to know what regime we are currently in, okay? So looking back at it, of the entire first half of this year, about 7 months of this year, we were in a regime where we had higher oil prices, right? Inflation going up. And then the regime we were in for interest rates was markets pricing in higher rates for longer. Okay. So that's this entire regime that we were operating in for about the first half of this year was very clean and simple. And you can see it wasn't that inflation going up is what brought gold down. It was the story and how it played out. That first we got higher oil prices. Once we had higher oil prices, we instantly saw that get trickled down into where? Into CPI, where you can see March 2026, April 2026, May 2026, June 2026, CPI went up. Inflation going up, and what does that do to interest rate expectation? It paints a higher rate expectation path, meaning dollar would go up, gold would go down, and NASDAQ and US equities would also see outflows and more ranging conditions. Now that's exactly what got translated on the chart in this entire move for about 2.5 quarters, okay? So you can see how it's not just one report that plays into it, it's the story. And now the story is shifting a bit here. What we have seen is CPI come down from 4.2. Last month was 3.5, and this month they're forecasting a drop to 3.4. Keep in mind, the minimum is 3.3% expectation, and the maximum actually just got changed. Did you guys see this? The maximum just got changed to 3.6. It was 3.5 yesterday. So that's very, very interesting. How do I know it's 3.5? Because I made a YouTube video about it. And I posted that video yesterday. And these guys just changed it now. But that's all good. That's a happy. Maybe it's also a
now
good call for us to keep a track of this and when this changes on our side as well.
now you
So
got to go redo your whole video. Gotta do
yeah,
it
that ain't
again.
happening, buddy. But this is the expectation, is that the maximum is 3.6% now. Now the market's already forecasting a drop. Okay, if we come out right at 3.4, that's still going to be taken as a dovish approach, and the markets are going to price in a lower rate expectation. And that's going to push gold up, that's going to push NQ up. And of course, it's going to push them up in a grander fashion if it comes out lower than 3.4, at 3.3, or even lower than 3.3. That's when you know the fireworks are going to go off. Bulls are going to eat it up. Bears are going to be getting stopped out left and right and center, and U.S. equities are going to be hitting 7,900. Okay. Now on the other hand, if we get a reading of, let's say, 3.5, which is same as prior, that's markets are going to take it more as, okay, but inflation didn't go up though. You get what I mean? They're going
Yep.
to take it as still an optimistic approach, and maybe after a few price grabs or some liquidity moves, then we get the real play towards the upside, right? But it's still an approach that it still puts emphasis on lower rate expectations since inflation didn't go up, right? So you get what I mean? How it puts more emphasis here, and then you'll get bears, gold bulls, Nasdaq bulls. So it's not that a single data report impacts the market. It's how does it paint a picture about the rates, and then what the market is pricing in for rates is what's going to get reflected onto your chart, and that's what you need to do. So take a screenshot of this. This is the cheat sheet you need to know to be successful in the financial markets, and that's it. If you can just know that higher rate expectations mean this for these asset classes and lower rates mean this for these, that's it. That's it. And then you can translate that across market movement, regardless of what market you trade. Now, gold is coming to our area that we were talking about, right? And I even put like a trade idea out on Twitter as well, as that I would like to see a pullback to any of these areas where we dig a bit deeper into here. Maybe we even push lower than Asian lows right here. If we come something like this and we push up, or maybe we do some sort of intraday play where we pull back a bit deeper into this lower demand zone and then kind of set up for CPI later on in the week. Okay? I want you guys to start thinking of the markets like this, where you're not just forecasting for what's going to happen in the next 2 hours. I'm thinking about how the week could play out. And this doesn't just start on a Monday. This starts on your top-down analysis and picturing how the next week or the next few months could play out. And that's what we were doing over here, right, guys? We were picturing out that when CPI starts going down, we had it go down right here. We saw that when we had Fed do a dovish hold here, and then we had the piece. Like, we knew things were going to play out this way. It's just a matter of when and when it was going to happen, and how many reports it was going to take before the markets priced that in. Now, looking back at the calendar, we know the Fed loves core CPI because it doesn't have energy or food prices. Okay, so it doesn't have energy or food prices. It's more of an accurate reading for inflation for them. But the markets only care about CPI, the headline reading, the year over year. So if core comes down, right? And keep in mind, core has been coming down. If core is coming down, then there's no reason for markets to be pricing in a hike for the next meeting. There's no reason for the September meeting for there to be a hike. Excuse me. So one thing I want to bring attention on is that later on in this month, we have the Jackson Hole Symposium. And at the Jackson Hole Symposium, that's where we're going to get a lot more information. And I think Kevin Warsh on Friday, August 28th, is going to say, yes, inflation is coming down. We're not hiking, we're holding, we're data dependent, but the markets are going to take it as a dovish swing again. And again, last year's Jackson Hole Symposium, for those who remember how eventful it was, it led to 4 months of continuous upside on gold from August 22nd to January 28th, guys. It's incredible movement in the market. 4.5 months. Now, gold, guys, I think we could even start pushing up from here. Obviously, the better buy would be in this zone, but I'm not personally entering here, like, because I'm in from over here. But if you're a scalper, this might be an area where you could look to take some risk. But I would keep in mind that moves like this are quite normal as well, right? Like where you push down here right to this, and then we push up. So this would be the optimal play. The deeper we go into this zone, near 4,300 would be amazing. That's what I am watching for, right? If my positions here get taken out at break even, because I'm in from 17. If these get taken out at break even, like, and originally my stop loss was lower here, like was down here. So if these get taken out, then I'll look to re-enter if we get rejections going into the zone. I've always said it, that sometimes it takes more than once or twice to position yourself for an intraday trade, just because, look, we went up, corrected like 80% of the move, and we came right back down near my entry. But the point being that if this area holds, gold is just going to do what it did here. It's just going to create a new high. Like we just created a higher low. Remember, this was that exact level we were talking about last week, the buys from here. Look how well they played out. So it's the same principle. Remember this, Kevin? Last Thursday we took these buys on stream, and then we also said that if we push further into here and hold 42.25, great buy area. And that played out the next daily candle. So something similar is that maybe this was buyers showed their intent. This area holds this session, and then going into the next daily candle, we continue to fill this range and start pushing deeper up into 4,400s. But we have to keep in mind, again, CPI this week, so markets are just probably going to position themselves before. But sentiment is strong. Like even before NFP, we were sitting at highs, right?
Yeah.
Markets didn't stop. So markets might just be pricing in a lower CPI, which we're already forecasting, right? So again, hope this is making a lot of sense on where we are at in the markets. What this means for US equities is that we're bullish as well, because US equities, again, going back to this same thing, lower rate expectations is bullish for NASDAQ, bullish for gold, bearish for dollar. Okay? That's all we need to keep in mind. And because it's bullish for NASDAQ, like US equities, this is just equities in general. It's going to be bullish for S&P. It's going to be bullish for Dow. It's going to be bullish for your stocks, your growth stocks that you're holding. Okay? So when we head into this environment of lower rate expectations, the markets are just hella greedy. They're extra greedy. They're running off of greed. They love it. It's like crack to them. Like they can't get enough of it. That's why you see such monstrous moves that are driven off of greed, and such clean one-sided volatility that doesn't exist when the markets don't have cut clear sentiment. Now you can clearly see the night and day difference in how these candles look and price action looks versus the bullish momentum here and here and here, because the sentiment here wasn't clean. It was choppy. Backtest this. This is going into when energy prices were rebounding. You saw the war tensions were increasing. US equities got choppy until inflation reports started coming out lower. The Feds did a dovish hold, and then the markets rallied, as well as with the peace deals talks that were happening. So look how clean sentiment is. The markets went from pricing in rate hikes to now pricing them out and pricing in cuts. Now this looks like a clean double bottom that could potentially just continue towards the upside, as we were talking about, just a retest of these lower prices from previous Asian session. And I'm looking to hold these into, of course, I'm going to watch 43.80, since that is the it's not the NFP, the FOMC highs from over here, from our FOMC stream. And then we'll observe how we push into 4,400. But guys, you can't say we didn't prepare you for this. We've been talking about the gold buys since gold was tapping on end of June over here, that this might be the area where the sentiment starts shifting. And we said it may take weeks. It may take weeks, right? So again, we could even get a deeper pullback on gold here, as I was talking about, to 4,200, and I'm still bullish on gold. We could even get a deeper pullback to 4150s, and I'm still bullish on gold. Guess what? Here's another one. Kevin's probably expecting this. We could even pull back to 44,000 75, and I'll still buy gold because that's the only direction I'm looking to trade. Is a buy on gold. Whether that happens from this would be ideal. Like this would be chef's kiss if we get a retest here or here. Man, would those be juicy swing positions that you could hold for the next month, and those would pay dividends. Those would pay you so much money. Like these types of plays, when you get clean sentiment and you're riding, it's the same principle as the sells that we were taking. Like look at when we had this bullet sell off, how much of it does it get corrected? Like 50, 60, 70% of the move always gets corrected, or majority of the time. Here as well, clean sell off with sentiment, clean sentiment. Then there's some event and catalyst that happens that drives market towards the upside, creates that pullback technically, and then we continue. So it's this exact same principle that we're playing on the opposite end, is that sentiment has shifted, structure has shifted. We're in a different regime now. Markets are pricing in a lower rate path going forward. Markets are actively pricing out cuts. Trump is telling us inflation is coming down. So all I'm saying is the next 6 months are very optimistic. And it feels like a great time to be buying gold, to be buying US equities, that even if at NYSE open, I would love if we could get something like this. Look how clean this would be, a previous area where buyers have jumped in, and we get a clean retest of it, or even from up here we continue towards the upside. But the point being is that we're bullish, and we can translate that across any market we're looking at. I could open up NQ and straight up tell you, yeah, we're fucking bullish, man. There's no reason for me to look for sells here. Yeah, some people look for it on a technical standpoint, but I like to move with the markets. And this is where I perform best. And that's what you have to keep in mind. Where do you perform best? Are you someone who scalps 6 pips and gets out? Or are you someone who's patient enough to take an intraday trade here in the 1 minute time frame, zoom out and and have these projections of, yep, I could see price going up to 4,400 in the next 24 hours. And that level forces you to build these different scenarios in your head that could take price there or bring it, or potentially cause a pullback. Now, if I go to market here and we go down here to gold, what could flip gold bearish if oil prices were sustained higher, right? If oil prices kept being higher, right? If Hormuz Strait was being closed again, that would push gold lower and it would flip it bearish, right? But all that would cause is some sort of outflow, bring us to a lower price, and then maybe Trump comes out, says peace deal back on, and gold now sets up for a buy. You see how it's always an exchange happening with buyers and sellers, and there is always something the market is focusing on. Okay? So, Kevin, do you want to cover when is giveaway?
We doing a giveaway?
Not that I was aware of.
No.
Not that I was aware of.
Bro,
We
we're
are
giving
doing
away
one
information.
on X, so make sure you go follow us there.
Oh.
And Kevin can drop a link to our X there, but make sure you go and follow us there because there is a giveaway happening, but it's on X. Here right now, we're analyzing and trading financial markets. So we'll drop the link to the X. We'll go. You guys can check that out. Give us a follow. Oh, guys, our Instagram is back up.
Yeah, let's go.
Our main Instagram is back up. We got access to our 140,000 followers. Again, Kevin, if you could drop a link to that as well, please.
Yes, sir.
Appreciate it. Guys, follow us. A lot of our followers here are new, and our Instagram got taken down, got banned, and suspended about 4 months ago. And every single attempt we've had to get it back, we got banned right away. Like, we had this account recovered 3 times, and every time we logged on, instant banned. So Meta hates us. It's this is what happens, guys. Like, when you're trying to strive for greatness, people are going to report you for random reasons. Competitors are gonna try to attack your accounts, and it is what it is. We're prepared for it. We continue to grow. We continue to strive. We adapted. They thought they could just take us down, take our Instagram down, and that's it, guys. No, we are much bigger than just our Instagram. Dude? I know I say things like I'll say this and maybe something bad will happen, but it's like the point being is that we're prepared for it. Is that this Instagram account could go down again and our team would be good. Like that's
Yep.
the point, right? That we're good regardless of what happens. We're prepared for it. Just like how we give you all these different scenarios, or if you want to trade CPI and you want to know where it comes out, we give you these scenarios. We also have scenarios in our head. We're prepared for in our, and we have systems that we fall back on when our Instagram gets taken down. So gold buying setup. Yep. Gold buying setup since down here over here here. Like gold's been fantastic buy and hold, right? Remember when we were dropping and we were saying, guys, we'll be the first to tell you when gold's gonna be turning into a buy. And that was like right here, we were talking about the buy. But as soon as we broke out, we're like, yep, that's it. The range is gone. This is what the markets are focusing on, a lower path forward for rates. And this is what the sentiment has shifted to. And this is where the regime is pointing towards. So now, if I want to translate that over to the US dollar and look at the higher time frame, because a lot of you guys also trade currency pairs, right? US dollar here. US dollar is very, very bearish. We talked about this when the dollar was bullish, is that when markets switch to those lower rate expectations, the dollar's gonna go back on its decline and it's gonna make its steady way back down to its lows because the markets are pricing in a lower path forward for rates. Now we went from doing this a few months ago, pricing in a bullish dollar, bearish gold, bearish NQ, and here's your bullish dollar throughout it all, right? From January when the war started till now, till end of June, and now you have that shift. The same time gold started shifting, bottomed out is the same time dollar bottomed out. Here, gold 24th right here. Sorry, June 24th. Gold 24th. June 24th right here. Gold bottom, dollar top, June 24th. So I don't want none of you guys telling me, dude, do you know how many? There's this one guy, and again, this is just something I gotta get better at. When gold was down here, and I mentioned that if CPI starts trending down, we're gonna start pushing towards the upside on gold. I had so many monkeys in my Instagram comments come to me telling me I was wrong that gold was going to 3,600. I was like,
Nice.
guys, like you guys missed the entire point. I said if we start trending down and oil prices come down, we're gonna go up. The fact is, people have too short term of a view. Is that these guys were celebrating in my comments when the entire CPI move got faded out. But look at gold now. You get what I mean? Like I'm not focused on what's gonna happen tomorrow. My entire focus is how can we ride gold back up to 5K? Like look at how much distance we have. Now, if I keep that in mind, any pullback isn't going to shake me out of my bias and conviction. And I'm not gonna get caught up chasing sells if we're down here breaking every level. I'm just gonna be a lion and wait for those buys to play out. Okay? So guys, if you have any questions, drop them below. We'll be going through a ton of stuff right now. So we've gone through gold, we've gone through NQ, ES, and we've mapped out where we're looking for our setups. Now, let's just go over NQ really quickly, okay? So we have our areas here where we've previously seen buyers jump in and really hold market structure, okay? So what I'm basically looking for, just like every single time I tell you guys, is I love to see a pullback, like a nice liquidation move where buyers, or in this case, buyers get into the markets at a nice level and then we push up every single time. Just like these, this is what I love. This sort of pullback, this pullback, this sort of pullback, this here. I'm a big fan of this because it allows me to have at least a target range towards the upside, a healthier range. Same with US equities, S&P, if we're here or here, a pullback into here would be chef's kiss, banger over here, and even bigger banger down here. But why? Because we're bullish and we're bearish dollar. Same thing with gold, pullback into here, beautiful buy, pullback into here, even better buy, and even deeper, oh my. We're going to do well. So, guys, we've covered a lot. If there's any questions, drop them in the chat. Yes, gold buys, exactly. Gold buys, regardless if we down here. Amazing buys. Here we're monitoring right now. Again, I mentioned I'm in from right here. 43.17? 43.17 from Asian session. And we'll even watch this entry. Like, here's the thing. Look at this. So I attempted to buy here first. That one I took a minor loss on, which I was fine with because it's an attempt, right? Like it's an attempt. The point being is that if it doesn't play out, it doesn't play out. I don't give a shit. Like I'm just gonna position myself from when it does play out. So I started playing out here, and now I'm in profit on those overnight. And then we came back down to break even. And we also talked about this maybe the bottom here while this was bottoming, double bottom here, and just a retest of this price range. And all it looks like is just ranging markets, intraday range consolidation, buyers jumping in from the bottom of this lows, from this range lows, and looking to continue towards the upside that we have up till 4380s being the previous FOMC, the June FOMC, and 4400 going into CPI. And we'll see how that impacts and how markets position themselves around CPI as we go into tomorrow. Okay, so that's where we're currently at right now on the markets. Kevin, I'll be right back in 5 minutes.
Yeah.
I just need to answer a few emails.
Yeah, go do your boss shit, bro. See you in a
Thanks.
minute. Let me know when you're back. Awesome, awesome, guys. Good stuff. Good stuff, guys. Man, run that like button up. It's Monday, and we're starting off with gold nuggets left and right. That's your giveaway, right? Your giveaway is good information, actionable insights, understanding the real bias of the market. And again, real bias, not in, oh, here's our opinion. We're giving you guys facts behind it. Just remember, markets can pull back. That's going to occur. I'm still waiting on ES 7768 area, even 7763, as long as we stay above 7756 for those longs to take control and really hold back and bring us towards those highs. Remember, S&P 500 all-time highs happened just 3 trading days ago. It was back on Wednesday of last week. We were at all-time highs on the S&P. Really good stuff there. Guess what we want to look for? Continuation. We want to look for momentum. We want to look for buyers to take control again. Right now, we're in the middle of nowhere. I'm looking for a pushback lower. We have 7 minutes before the New York session opens. We have a pullback at the moment. I'm looking for NASDAQ 29,743 as well. So definitely requires some patience right now. You you got it, Elsa. Absolutely. After the pullback, you were waiting on the break and retest to the upside. Yeah, so it definitely depends. I don't know if you're asking me or Nil, but what I'm looking for at least on Nasdaq is a pullback to this zone to hold for longs. If we don't get that pullback and we just pull back and we hold over here, then I'm looking for breakout and continuation. But right now, no trade zone. No trade zone until one of those two areas or setups are triggered, right? We want to create trade scenarios. ES, bit of a similar situation. We had our support right below us that held on Friday, held overnight Sunday overnight session, looking for that same possibility, that same trade setup that held over here for longs to hold up over here. I want the buyers that were able to push price higher from here to still be in this zone, to still be valid buyers. When we talk about institutions and market makers and the really big hedge funds, they can't just enter 500 lots of ES at once. They have to enter in different lottages and amounts. So they might enter here with 50, here with 75, here with 100, here with 100, here with another 25. Boom, they have 300 of their 500. Guess what? That's not all 500 of their position. They want to enter more. Next time price comes in, they're 200. They're going to start filling again. 50, 50, 75, 25. Boom, their orders are all filled. Markets react to those orders getting filled. So that's the thesis and the idea behind supply and demand here and behind these key levels and key areas. So that's what I'm looking for on ES. Would love to find these buys. How do you manage your stop loss and how do you manage trade when you jump in the market? So, AK, Akabir, I apologize on the mispronunciation if I got that wrong. Nil's going to be back in just a few minutes. Absolutely, got you guys. Did you answer your question? What's in Melbourne? Let's see. Nice. That's awesome, guys. I love seeing you guys communicate with each other and chat with each other here in the chat too. That's great. Nasdaq sort of struggling here. We have 4 minutes before New York session opens. Something else we want to be aware of as traders of the S&P and Nasdaq is where the VIX is currently traded. Now, VIX has a very strong key area right above us. So a similar situation where I would like to see the VIX move higher from here, which would support the ES and Nasdaq moving lower, and then find a reversal on the VIX off this level. When we find the reversal off the VIX to move lower, I'm looking for ES and NQ to find a reversal to move higher, right? So there's 3 confirmations. We'd have demand on ES, demand on the NASDAQ, and then resistance on the VIX. Looking for all 3 of those own confirmations of themselves to give us that pullback. Let's see, Control Z. There we go, perfect. Cool. So markets open in 3 minutes. We just got a headline right there. We could see what that was all about. Looks like your setup could become, yeah, it's, I do think we're definitely going to hit that zone. Question always becomes, where's entry? And some people might have a limit order here and just jump in blindly. You could even have your stop loss all the way down here. In my opinion, I'm not a big fan of this type of setup. I feel like the stop loss is way too wide. I'd rather wait for confirmation inside or reacting to my zone. So I use supply and demand as my foundation, right? Think of it as like the umbrella. It's covering it. It gives me that insight to say this is the area I'm looking for a reaction. We get the reaction near that area. I'm able to take that trade with more confidence than taking a random trade off of a random level. Neil, are you back, homie? Awesome. Let's get it.
What's up? What's up?
What is up? Do you mind checking the dollar?
Yeah, absolutely. So we just went through the dollar and we'll go through it again. But essentially, dollar is bearish right now. And why is dollar bearish? Because of a few things. We've had soft July payrolls, which slashed the odds of Fed rate hikes, right? And that's what we were talking about, was that right now dollar is bearish. And dollar is bearish because markets are pricing in lower rate expectations. And since on our little diagram here, lower rate expectations, lower rate expectations just means that's going to result in a bearish dollar. So what's going to end up happening to the US dollar here is that eventually over the course of the months, the dollar is going to continue to drop as inflation continues to come down, and the markets will then start to, again, price in a lower rate policy. And this is where we are talking about, it's not just one jobs report or one CPI report or one GDP report that changes the picture. It's how do these come together as a whole, painting the path towards interest rates. And that's what the markets reprice the market. That's what the markets participants reprice the markets upon. So markets telling you right now dollar is bearish because of these factors here. The July sum reflects faster hikes supporting yen over dollar. Soft July payroll slashed the odds of Fed rate hikes. And remember, the rate hike expectations was what was keeping dollar bullish this whole time here. Okay? So now when those expectations for hikes are disappearing and cuts are eventually going to be priced in, dollar is going to make its way back down like this. Okay? So this means Euro USD will go up. Okay? How do you set your stop loss and how do you manage? So again, what that looks like on gold, gold is bullish, NQ is bullish, ES is bullish because we're pricing in a lower rate expectation moving forward. And there's that shift in your regime where we went from doing this from the start of the year. Now the market's being focused on pricing in lower rate expectations. Okay. So this is, as I was saying, this is what you need here to be profitable in the financial markets. Is, if I could simplify it just on the macroeconomic standpoint, is that everything is a story that paints a picture here, and this is the outcome. Okay, so all of these things where you have jobs, you have inflation, geopolitics, jobs reports, everything comes to paint a picture of rate expectations, and then market participant position themselves based on what they're expecting rates to be and for what the Fed to do. So this is what it's all about. Now, over here, okay, looking back at how do you set your stop loss? Best way to set your stop loss is market structure. It's market structure. It's there's no objectively, it's the only way to do it is through market structure. Is you could have, if you, let's say I take this buy, okay? Dude, my stop loss was here. Like, and the reason it was here was because we could have come down to 4,300, and if this held, this still would have been a valid buy setup. Yes, I would have had to sustain 150 pips, 160 pips worth of drawdown, but like it's still a valid market setup because of what we have as market structure to the left over here. You get what I mean? So now if you're looking for a buy here, this is where it gets a bit tricky. Is that maybe you have your stop loss here, okay? But here's where the trickiness happens, is that the market could then push down into here and still respect this area before pushing up, and all that looks like is just a retest deeper into this zone to the left. So that's what you have to keep in mind. That's why I mentioned that I'm in from these buys here. If we push lower, I'll get break even stop loss on these, and I'll look to see how the market reacts down here. Now, if we break this, the next area I want to look for buys are down here on the intraday area, or wherever I see price forming some sort of intraday support. And that intraday support doesn't necessarily happen right away, right? You got to keep in mind, it's never like, oh, it's just one minute candle and that's going to be the low. It's always over the course of hours, man. Like, look at it, how many times we come back down to this area. Even here, like, we came back down to it like twice. So these supports aren't just made over a course of 5 minutes. It takes usually an hour to a few hours to form a low and then rally from there, right? Like here, we had a pullback lasted, and then we consolidated for about 2 hours here before we pushed up. So, or we come back, retest that area several times. Just like how if we came back down, retested here, that'd be fine. But right now, the way markets are a bit more ranging in the lower time frames here as well. So some sort of spike towards the downside, maybe retest 4,300. If that holds, this would still be very valid buy plays over here. Okay. So otherwise, if we just continue towards the upside from here, oh well, perfect. Overnight positions are still playing out, but it's just about being a bit more cautious. Like, I don't want to buy here and then have a stop loss here just for price to go down here. Plus, a stop loss from here to here is too wide. It doesn't have the right risk reward, since this would be like your first TP towards the upside. So you have to take all these things into account.
Awesome. Thanks, Neil. How do you determine if a trade is forming rejection moves at a zone? Do you wait for a single rejection candle, or what? I hope you understand what I mean.
Yeah, I understand what you mean, man. I understand what you mean, and it really depends. Sometimes it will be a single candle where I'll just enter, but like, let's say here, we did this on stream. I entered here on the third candle. This third candle here, that's when I entered, because I saw price at this zone rejecting, like this zone here that we had drawn on market in the morning. I entered there, and then we never really got a double bottom, but we continued up. But I also didn't take profit on this. Like, I took break even on it because market came right back down, and then we set up later on in the day, and this is where I re-entered again. And then you can see Asian session brought that entry point for the markets. So now that we're over here to current price, if we push down, like even here, look at this, you could have had an entry anywhere. Oh, this skipped way too back. Like, going back to yesterday, you've had like 1, 2, 3, 4, 5 5-minute candles, and then a retest of that area. So it took about 2.5 hours before the market started pushing towards the upside, right? So it took plenty of time to retest that area. Now look at this here too. Same thing here. Markets are just ranging right now, but we still are holding that sentiment. We're still holding price structure. And even if we dip a bit lower, do some whipsaws because it's low volatility, low volume on Monday today, because markets are waiting for CPI, which we know they're expecting disinflation come down to 3.4 year over year reading with a minimum of 3.3 and maximum of 3.6. So that's what we're positioned for. That's what we're positioned for right now. And likely it's going to be a slow chunk towards the upside to 43.81. Okay. It's good. So don't expect like this sort of movement today. Yeah. That's one thing we need to keep in mind, is not to expect this. to instead focus on, okay, that this is what I went into the mindset of yesterday, was that this Asian trade, I'm gonna wake up to it probably break even or even pushing lower into the zone, and that sort of expectation will like save you from expecting price when you're up here getting all giggity, and then it's like if my goal is I'm gonna hold till 43.81's, 4,400 is basically where I want to hold until, because I think we can take this FOMC high. But again,
Yep.
that's just what the market's gonna, like, whatever the market's gonna do, it's gonna do, right? Like I could be completely wrong and we reject here and we pull back deeper. Maybe that's what ends up happening. Okay, so again, all we can do is really wait, be patient, follow our analysis. Look where ES is, 7777. Wow, crazy
Nice.
number, eh? Crazy number. We just had NYSE open a few minutes ago as well. So not much, just the usual whipsaws. And this is where people
Yeah.
get things twisted. Is when you just wait for your key areas, like this demand zone or this key level. It's just way easier. I don't care about when the how the first 5 minute candle looks like, man. Like stop. We got to
Right.
stop looking at price that way and look at sentiment. This is how big boys trade. It's not. This isn't no. I want to look at the first 2 minute candle, see how that closes, and then trade based off that. Like I want to position myself for the buys from down here, and that's
Yeah.
because I'm riding the sentiment and the momentum on this current trend and regime. How do I know we're bullish right now? Because markets are pricing in lower rate expectations. And you can go to ES on market. Let's do that right now. Let's go to ES on market. Okay. Now, first of all, we can tell we're bullish here, right? Like we can clearly see we're bullish. Okay, we can go to NQ. We can see we're bullish. Markets also telling us we're bullish. We had nice plays here. We know what's keeping us bullish. Soft U.S. jobs data eases Fed hike expectation and yields. Perfect. Okay, so now we know we're bullish. We're bullish on gold. We're bullish on risk assets, and we're bearish on the dollar. Now, just by looking at that one layout, I'm able to know everything about the global financial markets in just 30 seconds. Okay. So look how easy it was for me to digest that macroeconomically and translate that on the charts, knowing that even if we push down to 29,550, I'm still bullish, or even 28,900, bullish, because that's what the regime currently is. And again, the entire financial markets are just, and price action is just a story about what's happening behind the scenes in the liquidity engine. And I want you to think of liquidity as a water system, okay? As a that there are certain levers that unleash liquidity, let it flow into the system, or hold it and keep it
Yep.
on the sidelines and keep it blocked like a dam. So when we know this, we can see that when liquidity is unleashed into the financial system, you get very clean, one sided plays towards the upside. Okay? Very clean, one sided plays. And when they stop the liquidity valve, you get much more ranging markets like this. Let me open up a better chart actually. You get much more ranging markets like this. You get outflows like this. But as soon as the conditions are aligned and that valve is turned on again, that liquidity comes back into the US markets and US equities, and it pumps and it continues creating new all-time highs because the markets are so greedy, and all it takes is an alignment of those conditions. Hey Kevin, what do you think of one-to-one R? Do you think it's sustainable long term? I understand it can have a high win rate depending on your strategy, and some traders say it gives them back confidence.
Yeah. You know, one to one, it definitely depends on your strategy and depends on your system. If it's something that is a proven result, I would say whatever trading strategy you have should be something stat based, where it's like, hey, listen, I trade an initial balance strategy, which means you got to wait the first hour of New York session, and then you could take a trade, and it's like it has a 80% win rate, but it's a one to one, or it's even a 1.0 .8 to 1, right? Where you're risking 100 to make 80. If you have something stat based, sure. In terms of psychology, though, that's sort of where I'm running into. Hey, listen, if you have a 1 to 1 and you take two losses, now you have the stress that you have to go win three times to make your money back and then some. Depending on the person, I'm not cool with that. I'd rather be more, okay, no, I can look to hold. I can look to keep my stop loss steady. I can take a loss here, make it all back on my next trade. I don't need to lose twice and then win three times to make it back and then some. So it definitely depends on who you are and how you are as a person. If you're more comfortable with it, obviously there's the stat that says something like 1 to 1s play out more than 3 to 1s or something. That all depends on your system as well, right? Everything is all systematic in trading. There is no definitive this is better than this because nothing is better than nothing. We have to know that. So depends on your strategy, really does. I understand may have a high win rate depending on your it depends on not only your strategy, but who and how you are as a person. If you're somebody that you're better off with a 1 to 1 because it has a higher win rate, then sure, go for it. But if you're like, no, I don't want to do that because I know I'm going to be stressing if I take two losses, then you definitely shouldn't be doing that. No, what are your thoughts on it?
Um, It depends on your win rate. I think that completely what it depends on. If you're someone who has like a high win rate, for sure go for it. I don't have a high win rate. I don't know what yours is. Like mine's in the 50s, man. Like I miss a lot. Like I miss a lot, but like when have a high win rate, like look at this. We get this play down here. Look how high that win rate's gonna be up till 4,400. Like that's a pretty high. Sorry, not win rate. Pretty high risk reward. Like 1 to 4
Yep.
basically, right? So
Yep.
even with like a 56, 55% win rate at a 1 to 4, 1 to 3, that's so much money on the table right there, and
Yep.
more profitability if I have a 50, 60% win rate and I'm trading a 1 to 1, right? Like it's going
Yep.
to be it's a much harder climb on that side. So uh, my win rate used to be even lower when I used to just look to scalp session to session based. You get what I mean? Like when I used to just be so focused in on not looking at the bigger picture.
Yeah.
So yeah, that's my take on it. Is that I think that if you're looking to catch big moves in the markets, and I don't mean like again the session to session. If you're looking to catch these big moves, then you'll automatically have a higher win rate. You don't have to worry about having a 1 to 1. It's
Right.
all a limitation in your head. If you decided if you decided that you wanted to start only taking 1 to 5 risk reward ratios, I'm telling you that is all you will see in the markets.
Yep.
The markets are just a reality of are just a figment of what you end up picturing them as. If I only want to take the clean moves, I will only see clean moves in the market and only execute on those. Okay,
Awesome. Awesome.
so
Guys.
keep that in mind
Yes,
as
sir.
another thing.
Sweet. Guys, coming off demand on NASDAQ. So somebody asked also, Paul asked, what like confirmation wise do I look for on something like ES or NQ? So like NASDAQ right now, I'm sharing my screen for a quick
Yeah,
moment.
go for it.
NASDAQ's wicking around near that area that we came up with this morning, right? So I'm looking for an entry now to see can we find a little dip back towards that zone, make our way towards those highs again. We have momentum. We have overall bias with us. This was a great zone from the pre-market. We pushed higher first. We dropped, starting to consolidate. We closed above it. Now that we're looking like we have 22 seconds left on this 5 minute, we have 20 seconds left on this 15 minute. It's definitely looking like it's ready to try to hold. So I'm looking for some longs because we're reacting to this zone. If this last 10 seconds here we start dumping, then I'm not looking for that trade. But right now, it is definitely looking like I'm going to be taking an entry long on this next 5 minute, next 15 minute as well. So we'll see if we could retest and pull back. But that's what I like to look for confirmation wise. I look for entry criteria, reasons to enter, and I'd rather buy the dip. I'd rather get long down here than long somewhere up here. So we'll just see how it wants to play out. See if we get one more dip for an entry. This is also where I'd consider, maybe even starting an entry down here off of the reaction and then looking to add if we continue or even add if we pull back. But confirmation wise, that 15-minute close into it, that's a nice little reaction. I do want to try to grab some longs near this 29,779. 29,779. At the moment, that's 1 minute like a higher low right there. It's a great pullback point. We're to it right now. Let's see what the VIX weighted index are doing. VIX is moving lower, which confirms bullish. I don't like that ES didn't hit its zone, but I still like the reaction we're getting to on NASDAQ. So I do want to be long rather than short. It's just really giving a difficult entry at this point, in my opinion, so far. It looks all right. That was the pullback to that 79 that I mentioned. Could try along here. Stops near the low. But I'm just playing it a little safe here, knowing that we're trading with the trend, knowing that we do have CPI this week, so markets might be a bit more range bound leading into that, but knowing that I'm also taking the trade off of my predetermined zone down here. So let it play out, do its thing. And you guys can always use, so I use supply and demand as sort of like a core foundation. Other than that, if you use another strategy, another system, right? Use an opening range breakout, use a moving average, right? Whatever you want to use, whatever you're comfortable with, you want to add an overlap, right? Just like Nalab said, when you're looking at that higher time frame, you're looking for those bigger moves. You're looking for those bigger risks or reward trades. And guess what? When you find those higher time frame zones, they'll have a stronger reaction than those lower time frame zones. So add those higher time frame on top of your lower time frame strategy, throw in those fundamentals and those headlines from market, and you're set. You're good to go. Neil, you seen anything on gold?
Where's gold at? Sorry, I was just doing work.
Oh, bro, you're good. You're good.
Gold
Gold's
is
pulling back.
yeah, I'm just looking for this, man. Like if we end up getting this, we end up getting it, or like it's just lower expectations today, you know?
Yeah,
Yeah, so we'll
gold.
see how that plays out, you know?
Yep, for sure. For sure. I am in some light longs on NASDAQ. Just playing it safe, playing it careful. I could always look to add to this. I do want to see some continuation to new high of day on NQ. Got to see some strength in NVIDIA as well. It is not above its previous day high yet. Is above its VWAP.
Yeah.
Awesome. Awesome. I'll pull my screen up since you do your thing. You want to dip out, homie?
Yeah, dude. I think I'm gonna have to step out.
All right. Sounds good, bro.
Hope you
Appreciate you
guys
being
soon.
here.
Yeah, we'll catch it up tomorrow.
Absolutely, bro. Absolutely. Yeah, what's tomorrow? Tuesday? You join tomorrow we're gonna have
9
Seb
9
on.
a.m.
Oh,
Oh, okay, cool.
you
We'll
want to
do
come on too?
CPI then. We'll do CPI then. You and
Yeah,
I
yeah,
will.
yeah.
Okay. Awesome.
Wednesday and Thursday.
See you for CPI, guys. Peace.
Bang. See you, Neil. Be good. Have a good day. Guys, awesome, man. Awesome, awesome. Guys, if you haven't already, run that like button up here on YouTube. We got to hit 50 likes minimum. 50 likes minimum. There we go. Buyers continuing, trying to hold up. I liked that buy the dip opportunity over here. I like that reaction to this zone we had, just looking to hold this trade. If anything, what I'm also looking for is to see nice. There we go. That's what I'm talking about. Is to see continuation, then a pullback, and that's where I'll add to my trade to continue some more. Yo, Nil's so quick, man. He's already in the comments. W's. Guys, go check out Nalab's account. I'm pretty sure you can. Yeah, you could click his name right there. Nil, where it says Nil Market. Click that account. Go watch his recent videos. Subscribe to his channel. Like all his videos. Show some support there, man. That is the one and only Mr. Nalab. Hey Kevin, how are you motivated to always track your trades in a journal every day? Do you track them immediately to avoid delay? Yo, that's a great question. So I created a tool myself called called Morning Mentor. And what that does is it's basically like a pre-market checklist. I'll show you guys really quickly here. But basically, it's a pre-market checklist. You do your market analysis and you journal your morning routine. So you're journaling your routine as you go versus journaling after the fact. So you journal it as you go. You take your context. What am I trading? Let's say ES futures. Any economic data today? We have none. Psychology check. Anything weighing on my mind? No, I'm clear. I could trade. Bullish buy. here's our bias and structure. Start with your higher time frame. Again, it sort of walks you hand in hand to do your analysis, to do your pre-market work, then create your own scenarios that you're going to follow through. From there, you lock in, and that's where you could log your trades, insert a screenshot of it, the outcome, which scenario you followed, trade notes, and your P&L. And that's how, if I had the time in the mornings, I'd be journaling that for my pre-market plan. That is with the Morning Mentor. Again, that is a bit of a product that I created myself there. Getting a bit of a whipsaw here on NASDAQ, almost considering an entry off this pullback, but I do want to be a little more patient here. Let's see. NVIDIA took a bit of a hit too right now. ES did not hit this demand zone to the downside. So my smallest concern is ES wants to make another move to the downside. I'd rather see this NASDAQ strength and see some follow through, but definitely got to see those equities continue too. VIX moving lower is nice confirmation for a bull trend, because VIX moving lower is inverse to ES and NQ. But look at that pullback we're seeing on NASDAQ right now. Massive. Be patient. There we go. We're holding that higher low around 29,787. Right over here, this broken 15 minutes of man we're trying to hold. That's that level 2 that I marked out, that I want to see the 15-minute break above and close above this level. We have 8 minutes left for that. I want to see continuation in these markets. Now, I mentioned before, use things like the opening range breakout. Use things like a previous day high and low, and VWAP. We have VWAP right above us and our opening range breakout right above us. That's an area that I really want to keep an eye on. Look at this pullback we're seeing here. Massive, massive pullback right there. Probably going to stop me out of this this entry I had from down here. I'm thinking of keeping it where it's at. If it wicks it out, it wicks it out. So my current stop loss is over here around 765. Reason I'm keeping it tight is because I was looking for that momentum. We did step in with nice momentum. At this point, though, obviously sellers are trying to bring it lower. It's going to sweep that 65 as it did. It still looks solid. I'd rather be long than short, but I'd rather be patient than silly. So I'll just let it play out. Nice stop hunt right there. Markets love to do that. Look at gold. We'll take a look at gold. I got you guys. Let's take a look at GC right now. GC. Nice. Good call. Look at that. Gold pulled back to that level we were looking for too. That's pretty solid. Take a look at our market profile, volume profile, I should say, on gold over here. Yup, low volume to the downside. We'd be looking to buy low, sell high. Is my work today. Awesome. Fast scalp on XAU for a 1 to 3. That's what I'm talking about, homie. Good job. We have 6 minutes for the 15-minute time frame to close. What I'd be gauging with gold is how we react to these new higher lows we have formed. If we hold those, then these buyers are going to look a lot stronger. If this closes outside of the zone, I will look for gold longs, right? So we're able to switch and say, okay, I was looking for NASDAQ, but now I see NASDAQ extremely range bound, just sort of chopping around right here between VWAP and demand. I'd rather wait and trade that range. Gold, on the other hand, was a lot more bullish, did make a recent high off of these lower highs, and if it holds this low, it's making higher lows too. So 45 seconds left, and we're going to have a more definitive answer to if we should be taking gold long or if we should be looking for these NASDAQ longs again. Now let's see. Just wait. These markets are pretty choppy right now. It's Monday. CPI is Wednesday. Look at that. Gold taking another hit. 20 seconds left here. That's why we want to wait as well. Good stuff. Let's see. Be patient. We don't have clear direction right now. Take a look at our equities. I'm going to show you guys something. NVIDIA, new low of day. Google's holding up just like NASDAQ price action was off of demand. Meta holding up. Microsoft holding, Apple holding, everything's holding except for NVIDIA right now, which is still making it much more difficult for NASDAQ to find trend. Gold did close outside of that range. I'm not taking gold long. I'm not a fan of these gold longs up here. Dollar's still pulling back a bit too. Yeah, there goes gold, trying to close back within that area. Let's see. I would watch it later. 4,300 will hold, and will let us enter roller coaster with. We'll see. Yeah, we'll see for sure. For sure. NASDAQ, glad I took that little stop out. Don't want to be chasing at this point. If we come back to demand, great. What I might even look for too is ES. Take a look at ES. Came so close to that demand zone and it failed it. Here we go. NASDAQ trying to move on lower. Why? Because we have that weaker NVIDIA right now. Weaker NVIDIA will always make it harder for the NASDAQ to move higher. So let's see, NASDAQ trying to dip again right here. 30-minute closes in 4 minutes. Same situation. I'm looking to see how that 30 closes, how that 15 closes. Do we close with more strength? Do we close back within this range and look for momentum to the downside then? There goes gold, tapping this zone again. Interesting. Am I taking gold long? Not necessarily, not right now, at least. Possibly considering it, but we're gonna wait, guys. We're gonna wait. No reason to be jumping in blind. NASDAQ doing its best to fail, doing its best to hold, doing its best to do a whole lot of nothing. Stay out of these markets right here, ladies and gents. Be patient. Run that like button up, man. Are we above 50? We're above 50. You guys are legends. Absolute legends, man. Nil gave us some great information, great insights today. That is amazing. All right, guys, what I'd be keeping an eye on gold right here is how we close for these last 3 minutes. Do we start to reject back higher? Then I would consider a long on gold. Do we start to continue and hold lower? Then no way I'm looking for longs. NASDAQ, boom, there's that pushback lower on gold. NASDAQ still struggling around right here. I really wanted to see the 15-minute close higher. Well, guess what? At this point, 2.5 minutes left. That 15 has to get going right now. We're within the next 2 minutes. Or guess what? We don't have time to make that happen. Let's take a look at our economic calendar. Pretty sure we don't have anything today. We would have covered that. We have CPI on Wednesday. We have PPI on Thursday. Nope, nothing today. Tuesday, ADP, nothing crazy. There goes NASDAQ trying to hold again, probably just to fail again. Microsoft trying to hold. Gold with another drop. Did gold break that low? So close. Double bottomed right there at 4377.7. Hey, Kevin, what's your post-market day like? Do you immediately close the chart or revise? Good question. So post trading, like entire trading day, usually I'll do like a brief of the trades that I took, but I'll usually like wrap it up. Maybe I'll do some edits, so I work on, you guys know I'm on social media, some posts and stuff, engaging posts, get people more engaged, educational, informative, all that fun stuff. NASDAQ trying to hold again here, 1:18 left. I do not want to buy these highs at this point. Not without some stronger reasoning, not without some strength behind it. Let's see. But yeah, your best bet, if you're a beginner trader, you're still trying to find your edge, then guess what? You are revising after, you are reviewing after. If you're not reviewing after, you're leaving yourself at a disadvantage. There we go, gold broke that low. Glad we said stay patient, don't just jump in randomly. NASDAQ really struggling, man. Still creating some higher lows here. Just hasn't created that higher high off of that 15-minute orb. 30 seconds left in the 5-minute here. And truly a bit of a struggle right now. Gold CPI, yeah, probably. Hopefully it pumps on gold CPI. Amazon trying to tick higher. NVIDIA trying to tick lower. Google trying to tick higher. Then boom, it just got rejected lower. 50-50 on these equities right now. Would want to see some continuation right here. If we don't get that, we aren't going anywhere anytime soon. Probably just going to range back lower again. Let's see. NVIDIA is struggling like crazy right here. 5 minutes still showing strength above that demand area. 15-minute is trying to close with some more strength. It's just such a struggle here. Like, there's no argument about it that markets are not giving us clear direction. Again, a lot of resistance, a lot of support, a lot of resistance, a lot of support. Gold moved lower. We're not looking for gold longs at this point until we're able to close back to the upside. Nvidia, Nasdaq, it's like they're too tough of points. Nvidia's moving lower, Microsoft's moving higher. Google's struggling. Like, there's a lot of weakness. Yeah, there's that weakness that I'm seeing right now. I do not want to be just grabbing random longs. I do want to be long, still bullish bias, but I need the clues, right? I need the market to actually start playing out in my favor. Show me some strength. Show me some reasons to take a trade. Don't just show me a lot of chop. Nvidia's close to new low of day. Google just rejected VWAP. Like, if anything, there's more reason to possibly take a short here that we're going to fail, but I'm not going to short these markets. We have to be able to recognize, okay, if that's the case, if I can make an argument for shorts and I can make an argument for longs, then your argument becomes answered that you're not taking any trades. Because if you take a trade short and it plays out to the long side, you're going to be like, oh, I knew I should have went long. And if it goes long and you went short, I knew I should have went short. Or vice versa. You guys get what I'm saying. It's not worth it to get caught up like that, where you question one thing, you question another. You have a reason for this, you have a reason for that. If you're making an argument for both sides, your answer is stay neutral, period. Gold, same thing. We want to see gold start closing back outside this range again. If we don't get it, we don't get a trade. Nasdaq did hold. Am I chasing it long up here? Absolutely not. That's it. That's really it. That's all I can say right now. That's all I can say right now is we're just staying patient in these choppy looking markets. Look at them on the 5-minute. Does this really look like a smooth trend up? No. So when we start breaking and closing higher, that'll be my sign to look for a pullback entry. Until then, I know that every time we try to break up, we wick lower like crazy and vice versa. Got out NQ at break even. Okay. I do think, hey Kevin, what was the first thing you bought from your first payout? I'll say the first thing I got when I first started trading, I was trading options. I got like a nice little gold chain for myself. Nothing crazy, but that was like my first paid myself, get myself something type of payout. Um, Other than that, what did I get with my first prop firm payout? Nothing really. I think it was just like more evals, setting things up, paid some bills. That's what trading's about too, guys. Not just about, let's go spend every payout we have on a gift. Let's pay some bills. Let's take care of some bills with trading. How cool is that? Nvidia new low of day, Google still struggling. A lot of volume entered the market right here. Again, I find reasons for shorts and longs. I'm not taking a trade, as you guys should not either. But Kevin, we should be bullish. But Kevin, we should be bearish. You're right. We should be one of the two. Are we either of those right now? No. Are we going to force a trade right now? No. The hourly just closed, and it closed a lot more bearish for things like gold, for things like even the NASDAQ. Take a look at the hourly. No, it did close as a reversal candle. Great. 2 hour, 4 hour. Those a bit more of a struggle. 30-minute, 15-minute. Oh, that's the 5-minute. Here's 15. Still a struggle. Yo, absolutely. Piyush, I got you, brother, man. Absolutely. Guys, don't forget tomorrow's session is going to start at 9 p.m., not 8:20. Starting at 9 o'clock tomorrow, because I will be on Chart Fanatics live tomorrow from 8 to 9 for market. So go check the market stream there. It'll be a good show. Same thing we do here, just on the Chart Fanatics stream. Show some new people how we do. Guys, make sure you show up in the comments and say, hey, come join us every day. Spread the love of market in the morning. Nasdaq, Nvidia still driving lower, man. I would love to take a long position here with a tight stop loss for momentum trades, but with Nvidia just ticking lower and lower, there's really no set reason for me to want these longs. Let's see. Gold sells. I would be careful. 4,300. What are you looking for? Oh, you're probably looking at XAU USD then. I would be careful with gold sells. We know that the current bias on gold is still bullish. Short-term sells possibly. 42,330. I see what you're saying here, though. Bit of a fair value gap area after we broke a low. Throw a volume profile on there. Not too significant of a low volume shelf. Dude, I'd really be careful with short and gold. I'd, if anything, be looking for longs off of this zone, but very 50-50 markets here on gold. We had a stronger, higher time frame closure to the downside. We have higher time frame bullish bias though as well. So it's really one of those moves that are arguable where you can make an argument for both directions right now, but the stronger argument is buys. Bro, NASDAQ, please just like start to reverse higher here. NVIDIA, just start reversing higher here. Looks like we're trying to squeeze. We need to see volume at these highs to get a big breakout. If we get that breakout, probably head towards 29,867 on NQ. I just hate that NVIDIA struggle, man. Hate it. There's that break up. I said 6-7 would be upside target if we break out with some volume. We are seeing some volume right here. I just hate the fact that each time we are making a high today, we do pull back. So if anything, we're going to use that orb. Came off of this demand zone, unfortunately. Not in from this demand zone. Could have looked for an entry. Did stop me out of my original entry. I should have been a bit more, bit of a wider stop loss on that. Used the middle point. Instead, I used a recent low. It wicked me and then it continued. That's fine. We look for a re-entry at this point. The initial balance, the opening range breakout, VWAP. So right now what I'm looking for is I'm looking to see NASDAQ close above orb, close above VWAP, retest and push to go higher. Gold continuing up, strong move on gold. Look at that, it retested demand, trying to hold on GC right here. Very good. NASDAQ might continue here. I'm not in it myself, but it does look like it has momentum. NVIDIA just took another turn to the downside. Don't want to buy highs with NVIDIA weakness. Yeah, gold looks alright. Gold looks alright. Guys, let me know if you took any trades today so far. I think... Where was it? Whose question was it? I think, Paul, did I answer that question before when you asked about confirmation? So confirmation could really be anything. If we had demand zone below an opening range breakout, I'd be looking for that to form and then break low into demand, hold and move higher. If I'm using maybe volume analysis, let's say I'm using an order flow tool and I saw a lot of volume came in at lows, then I could take that on confirmation that there is substantial volume to give us that reversal. But regardless, confirmation has to come on top of the zones that we predetermine. VIX trying to reverse from here. Weighted index also struggling right now. NVIDIA struggling. Microsoft new high of day. Google and Meta both just took a hit to the downside. Meanwhile, NASDAQ is continuing to try to push higher here. I said if we get a breakout of that 36, we were going to see 67. It's a quick 30-point move on NASDAQ. I did not take this trade myself there. Definitely seeing some more volume. I'd want to see us close anyway, so I could look for the pullback for a retest entry long, right? We're not forcing trades at highs. Big fat 20 point on NQ earlier. Nice. There you go. 20 points. Get it, man. Get it. Good job, Ryan. Nice low volume imbalance between 34 and 50 now. 34 and 50. Is that 34? No, that is 80. Yeah, 85. So right there and 34. So this is the area I'd like to see NASDAQ try to hold at this point. Let's see, 50 to 34. Good stuff. I'm going to be looking for an entry in that area on the NASDAQ today. So now that's my entry. That's my pullback area I'm looking for on NQ. Break higher. Boom. There's that take profit level, 29,687. If you guys caught that, good job. Listen, man, 20 points, nothing to complain about. Profit's profit. Got to take the profits where we can. 16 seconds left here. I'd hope to see one more pullback before we can continue. That way we get an entry on this trade. 10 seconds, and we are just continuing higher. Finally, some momentum right off that zone from our predetermined level in our morning session. Guys, that's awesome. That's great. That is great. Again, I missed entry myself. You guys could be in a trade from here. Imagine being in a trade from down here. 130 points on NASDAQ you're floating right now. So I'm waiting for one more pullback towards 29,850. I'm taking the entry off 29,850, stop loss below near 29,830. So right below VWAP, looking for that VWAP retest. Nvidia trying to push higher, Google back to the buy side, so is Meta. Microsoft just made new high of day. Apple's a bit weak, but Amazon also flipped more bullish. So overall equities are again leaning on that buy side now. I'd much rather take a pullback entry than a chase entry up here. There we go, some continuation. Wow, man. Were you going to continue from here like crazy? Possibly. Anything's a possibility. Oh. My bad, wrong button. CVD took a bit of a hit. That's our cumulative volume delta. Saw some selling in this pullback, but look at that. NASDAQ continuing higher. Right bias, man. We had the right bias all day. Even gold holding up. Great longs off gold demand right there. NASDAQ also holding. Just waiting for a pullback myself for an entry. If we don't get it, I don't get a trade. That's it. That is it. Gotta be prepared. Gotta be ready for anything and everything. Nvidia, great reaction. Yeah. Nvidia's back to a pullback right now. So take a look at Nvidia. Take a look at all of our equities. Nvidia's down here, bottom middle, near new low of day. Microsoft pushing near new high of day. Meta is range bound. Google is range bound above VWAP. Amazon, same deal, above VWAP range bound. Apple took a gap down today, trying to hold and move higher. So again, we're seeing weakness, and yet NASDAQ is able to continue with the overall optimism of what's going on with the rate hike situation, right? With the rate cuts, rate hikes, or is the Fed going to hold? And of course, the optimism from the AI and industrial growth. So let's see, can we get one quick pullback? We just want one quick little pullback right here. Just one little tap into their entry, boom, and we'll take it all the way up. No, I'm just kidding. We'll take a quick, nice little move to new high of day, or even target 30,000 key psychological whole number right there. So that would be a great take profit. That would be about from that entry point, looking for, wow, almost a 10-1. So again, I'm being patient for this. 850 entry, around 830 stop loss, take profit 30,000, even new high of day. If we don't get entry, we don't get the trade. It's how the cookie plays. Chopping around. VIX moving higher a little bit here as well. Gold is still moving higher off of this demand area. We said to be very careful for gold to react to this level, 43.77. And this demand zone, which is a 30-minute support area that did hold up on Friday and then twice overnight session. NASDAQ looking like it's getting ready to give us a pullback here. And then it's just like, nah, it's just going to pump. Let's see. Just wait. Be patient traders. Don't chase every little move you see, or else you would have been chopped up down here. Don't look at a move like this and be like, oh, well, I should just buy because we're pumping up. No, because guess what? Down here looks like we were pumping up. And then what happened? You would have bought near 800. It would have pulled back 50 points on you. You would have been like, oh my God, I got stopped out. I can't believe it. Moved for you again. You'd be second guessing. You'd get in maybe near the high, get stopped out 30 points again. Don't buy highs. Don't be a chaser in these markets. We want to find areas that will give us a pullback, key levels, areas that line up with confluence, whatever the case may be. 54 seconds left here in the 5-minute. 15-minute also has 50 seconds. That's a great 15-minute candle closure up there. Hourly looks solid. 4-hour. Hourly doesn't close, though, for another 45 minutes. 30 minutes doesn't close for another 15. This 15 closes in 36 seconds. I do think this will close higher, give us that fair value area. And again, an entry point right below near 29,850 is what I'm looking for. 24 seconds left. Nvidia turned back around bullish. Amazon started rallying. Meta's starting to rally. This is what I like to see for the longs. That's a nice turnaround right there. Take a look at this, guys. Nvidia turning back around bullish. Microsoft new high a day. Meta pushing up. Google still holding VWAP 2 seconds. Amazon holding up with a rally. Come on, NASDAQ's just going to rally off those buyers, man. A lot of buying at these highs. Our only job is to execute our edge. The money is a byproduct. Absolutely. Couldn't agree more. Couldn't agree more. 100%. Man, we're waiting. Waiting. If it doesn't give an entry, it doesn't give an entry. But I'm waiting for 29,850. It's 10:15 right now. 15-minute time frame. Always look at those higher time frames. Still closing more bullish. So we'd want to buy the dip opportunity. And look at that. My 29,850 area I'm looking for, it was low volume on a volume profile. It lines up with our opening price level, lines up with our opening range breakout level. It's got a lot of confluence right there. And on top of that, I believe it also lines up with our VWAP level. So yeah, I'm looking for a pullback and an entry near 29,850 on NASDAQ. Nvidia holding up. Microsoft taking another new high of day. Meta struggling. Let's see if we get that pullback. There's 690. US 30 lagging behind NAS, buy possibility. Nvidia, nice 15-minute candle close. Take a look at Nvidia 15-minute. Nice, yeah, rejection candle on Nvidia's 15. Not bad, not bad. Dow, we could take a look at the Dow real quick here. Dow is also trying to hold up, which would support ES, not so much the NASDAQ. Dow is more of an industrial, NASDAQ's more of a tech and growth. Both of them are growth, but NAS is more tech. 3 minutes. Excuse me. Man, I'm waiting. We gotta let these markets come to us. We cannot chase up here. Imagine chasing up here with the tight stop loss. It stops you out, and then it ends up going to your original entry that you were looking for. No, thank you. Waiting right here, guys. We're pulling back a little bit. Nvidia's seeing a pullback too. Excuse me. Weighted index trying to hold. VIX trying to move back lower, but struggling. Just gotta be patient, man. NASDAQ is near an area of resistance right here. I want to see what time frame this resistance point is from. 4 hours. So this is a 4-hour resistance. We have broken it in the past, so I do think we can break it again. I do think, however, we are going to get a pullback. All right, we're getting a bit of a pullback here, guys. I'm waiting for a reaction off of 29,850. 29,850. Here's a deeper pullback. Come on now. There's 70. We're hitting 29,870. Hitting previous day high and trying to hold at the moment. Again, what I'm looking for at this point is, should be, that low volume shelf right there to go along. 29,850. We're at 860 right now. We're getting very close. Getting very close. This is the closest we've been to our entry. I've never seen an entry like this. Gotta have fun, guys. Gotta have fun when you learn. Gotta have fun when you earn. If you guys got any questions, please let me know in the chat. Let me know in the comments. Let me know if you want me to cover anything. If you want to see any headlines. If you want to see any specific assets or tickers. Gold is, wow, nice rally on gold out of this demand zone, guys. Look at that. Huge. Great level there. NASDAQ has a minute left in this 5 minute. Nvidia took a turn for the worst, coming to its new low of day right now. That is phenomenal. You can see how NASDAQ wants to get ready to react. I am ready to buy. This is the volume profile, anchored volume profile tool. It's on the left-hand side over here on TradingView. You click it, and then you click where you want it to start. I started this one on New York session. We could start one over here for 6 p.m. for the futures session, also giving us a low volume shelf right there. So that's what I'm looking for on NASDAQ for some buyers to try to hold. We have 17 seconds left. Anchored volume profile. These are the settings. Numbers of rows. Row size 150. The higher the number, the more rows it shows you. Total, instead of up and down is not going to give you real information. It's going to sort of throw you off, if anything. Total is fine. We're looking for total volume traded at each price level. Value area should be 70. That is standard. Volume profile values I have off. We don't need the values on the chart because we're using the volume profile shaping of its own. What else? Up volume, up area, I have blue and blue. Value area high, value area low. Why are these? Those should be whites. There we go. That shows us where 70% of the volume was traded in today's session or in that volume profile session. So still looking for a pullback. Did not give me the entry I was looking for just yet. VWAP down there, all these key levels down there. It tapped it once on the 1 minute time frame. We tapped it once over here. So we pushed up, we broke above it, we tapped into it, and we held. So unfortunately, it can be one of those situations where we had the entry over here, we missed it, and it did what it did. It continued, it gave us the entry, we missed it, and boom, whatever. We got to be able to take it on the chin type of deal, right? Take a stop loss, take it where you don't end up taking that entry, but you don't end up forcing trades and getting stopped out. Kev, what are we wanting to see on Nas? Good question, Joyce, and great profile picture. So what we're looking for on NASDAQ is a pullback towards this low volume area right over here. So look at this heavy volume, low volume, heavy volume. So this low volume is considered a low volume shelf, a low volume node, but most importantly, it's considered an imbalance. So because volume should be looking consistent like this, all of those orders that didn't get filled are waiting to get filled. So when price moves lower, we're looking for those orders to start filling and markets to react to those orders getting filled. So that's what we're waiting for at the moment on NASDAQ right here. Looks like we're trying to move lower. NVIDIA, another new low of day. Google got very close to new high of day right now. Microsoft continuing higher, Meta continuing higher. Amazon took quite a hit, but was at an new high of day. You're welcome, absolutely. Here we go. Come on, NASDAQ. We're getting close to that zone. Seeing a lot of selling pressure here. Be very careful. Did not get filled yet myself. How funny would it be? I'm not even going to say it. If it was like a point away and then it just decided to reverse. Let's see. No, we didn't hit that low volume area, man. We were very close. Very close. See if we can dive into it and then find some support. Oh, actually, we were crazy close. Closer than I had marked out on my execution chart. What are we looking for? 848. Let's call it 850. Okay, trying to move lower here. Be patient. Waiting for a long position. Boom, there it is. There's 50. Minute 34 left. NVIDIA new low day. Microsoft, Meta, all these other equities are holding. If we start to get a reaction, I'm taking it long. If we dump right through, no thank you. Starting to see a little support here. Price is starting to, I don't want to say flatline, but starting to hold. And try to stab long, stop near the bottom of that range. Just being patient, being careful on this entry, guys. Really looking to see these buyers step in with a bit more strength. Even if you don't want to take it directly in the zone because you want to see the reaction, you wait for the reaction and then you take it somewhere above the zone. Yeah, look at that. Above the zone, and then you can put your stop loss at that recent low that we made. So we had a big drop through it. It's what stop losses are for. It's what preparation is for. Let it play out. Let it do its thing. We know we're very range bound. We came right off of this rejection point, coming right into the orb, right to VWAP. Again, a lot of support here. Would not be like, oh, we have to go short. But remember, we had Meta close to new high of day, Microsoft at new high of day, but NVIDIA is dumping. NVIDIA is absolutely dumping right now, and that is making it extremely hard for any longs to play out on the NASDAQ. If you trade the NASDAQ, you know this. You know to keep an eye on your equities when you trade. All right, ladies and gentlemen, we're going to be wrapping up our market in the morning episode there. Gold ended up playing out a lot nicer than NASDAQ did. So take a look at gold. We came into demand, we closed back out of it, we retested it and closed again out of it. That would have been a nice signal to take an entry, talk about different confirmations, while we look for a signal that buyers take control off of one of our predetermined zones. Target recent high. It's a 2-to-1 right there, and it's still going. Gold had a bit of a nicer setup. We will check that tomorrow. We'll remember that tomorrow. Remember, every day will get you closer to that better day, right? Every day in the market is set to make your next day that much better if you're doing the right sizing. So good job. I hope you guys, even if you took a trade, I hope you were able to manage your loss properly. I did take this entry and it did stop me out. It is what it is. We move on with our day. We wait for either the next setup or we wait for the next day. But what we don't do is we go, oh my God, it stopped me out. Now I got to try again and again and again and take paper cut after paper cut. Trade your edge. An edge is not going to require you to take 40 different entries. An edge is going to have much cleaner reason with cleaner results. Guys, I hope today's market in the morning helped. We had tons of gold nuggets in here today. NASDAQ absolutely played with us. It was definitely an interesting market to say the least. We held the demand area very nicely, but other than that, very range bound. We're trying to close outside the orb still. Doesn't look like we're going to try to make our way to the bottom of the orb. That's 126 points away on NQ. Is it possible? Of course it's possible. Is it probable? Not necessarily. Gold. Look at this, guys. Gold is rallying. Imagine those longs in gold demand down there where we had from the pre-market. And then bang, that's a 5-to-1 up to this recent resistance point. That's amazing. Gold had a lot nicer structure. So guys, have a great rest of your day. ES, also just really quick note on ES right here. ES never hit that demand zone. ES was a solid 1 point away. It hit 77.69.75. We were looking for 77.68.75. And then ES reversed. So NASDAQ held demand. That would have been a cleaner entry and trade today. It is what it is. We come back smarter and better tomorrow. Come back with the edge. Come back with our plan and everything else. What just happened? Nothing crazy, just some extra volatility. We're range bound today. Always compare the move, right? We had a quick move, but it wasn't relatively bigger than anything we've seen already. We've been getting 40-point moves, 20-point moves, so this wasn't anything crazy. Just a pullback, just a liquidity grab, just Nvidia holding markets lower like Nvidia likes to do. Look at this. We have Microsoft new high, Meta pushing up, Google pushing up, Nvidia dropping. Nvidia is the thorn in the market side right now. All right, MES sideways, yeah, ES sideways, NASDAQ sideways at this point too. Gold has a lot nicer momentum right now. Look at the momentum we're seeing on gold, just flying right here. Guys, great work, everybody. I hope you made some money today. Have a great rest of your day, and I will see you all back here for Market in the Morning tomorrow, 9 a.m. We were going live tomorrow at 9, not 8:20. We will be live on Chart Fanatics. I want to see you guys there. Their YouTube is Chart Fanatics Live. Join me 8 to 9 tomorrow there. Go over some fundamentals, and then we'll be live here at 9 o'clock, and we're going to bring Seb on tomorrow. So good stuff, guys. Great day, everybody. Good analysis. Good golden nuggets. That's the word. I was going to call them Easter eggs. Good golden nuggets today by me and the lab. Great information. And not every day I'm going to be giving you guys the perfect entry, right? We went on a killer win streak for like 2 weeks in a row on ES and NQ. We were just killing it. Today, took a loss. It is what it is. We come back tomorrow. Look at that. It's playing out. Okay, it is what it is. I'll be back tomorrow. I'm not going to force anything. Gold is rallying. I'm also going to take note that, hey, if gold is holding, and gold played a lot better yesterday than NASDAQ did, I'm going to look at gold today, meaning tomorrow. So tomorrow we're going to keep much closer eye on gold. Yes, Lisa, absolutely. See you. Have a great rest of your day, and I will see you in HTL later. I'm going to make a nice, I guess it's not a surprise visit, but a surprise guest appearance on the HTL community later. It's going to be fun. All right, everybody. Have a great rest of your day. I will see you all tomorrow. Trade carefully. Don't over leverage. Know how much your risk is and live to trade another day. Take care, guys. Peace.